Hello everyone, my name is Danny. In today's video I'm going to talking about the strategy that is one of the most important thing that is the people the beginning getting excited and because if you don't know what your strategy is, you can't trade, and if you don't know how to trade, you will be broke. Let's get started, and I'm gonna tell you what's the best thing that you need to do as a trader. At this topic, I'm gonna tell you about the Fibonacci level, why is important, and why we need to know about the Fibonacci level, because a lot of traders use the Fibonacci level for the trading. And if you don't know how to use them, I'm gonna at first a little bit introduce it, then I'm gonna tell you how to use the Fibonacci level for your trading strategy. We are on the Bitcoin daily time frame now. We start from the higher time frame, then going for the lower time frame. First, we're gonna going for the drag the Fibonacci level from the beginning to the top. Fibonacci level has one of the things that is really important for us: 382, 236, 382, 50%, 618, and 786 and 65. This area between the 618 and the 65, that is called the golden pocket area. This area. Why your account is being blown away? Because you get a FOMO first, because you don't know the sentiment of the market, you do not like how to trade with. We first start with it, that is Fibonacci level. The area that is important for us, the first area, as you can see here, market is being react on this area when is something that is, you know, that it's market is not magic to give you the exactly number, but you need to have a plan. This area, it's really important because we have a really big support on this area first, then we're gonna going for the 382, and the 382 around this area, another support, but it's not that much big important like this one. If they break this one, break below this one, we potentially going for the short position. But we have a one level here on the 382, 50%, and the 618. Potentially market is bouncing. If they break below this one, potential reversal back from there. But still we're gonna be open the position because we are thinking about the risk reward ratio. If they break this level and closed at least 30-minute to 1 hour candlestick, we would be able to open the one short position on here. And our target first, we're gonna going for this one, and we have a really small area of the stop loss compare with this one. I'm gonna go in this one, put it on the side, and tell you what's the next strategy is. We need to, based on this position that we are open, we need to take a profit, one here, one take a profit below this one, and then make it risk free and they put it on the stop loss as an entry point, and the second one is gonna go into the golden pocket area, this area. And as you know, the like a golden pocket is being carried with the big support as well. But we need to understand another thing on the market too, sentiment of the market. If you don't know how to identify the sentiment of the market, we need to more rely on the volume. I'm gonna tell you next on the next video how to use the volume for understand the sentiment of the market. The next step for us, that is first plan for us. If you break this one, we're gonna go in for the short. But if the see this area as a sign of the strength based on the volume profile, volume, we open the long position on here because we need to understand the market first. We need to go in for the really small area for the short and the big for the long. We need to understand that this area is really, is really important area that is identified, that is really major resistance. But we need to be cautious about this one. We need to get at least 2-to-1 risk to reward ratio based on this area. But this one has a really big risk to reward ratio, and we need to identify ourselves how to open the position. That is first plan, because if you don't have a plan for the open the position and you get a FOMO because we have a big candle like that, right? We open the position and then our stop loss is been hit, because this market is not for the get a FOMO. Because if you get a FOMO and the fear of the missing out, if you don't know what's the meaning of the FOMO, your account is being broke. And that is first step for us to identify the area that is need to understand the market. If you get a FOMO, you loser. If you don't have a plan for your trading, you loser too. Because if you FOMO, you open the position based on these candles, then we have a big support here. How come market is not all the time based on your behavior or a lot of people on the last couple of days, I have a plan for the open the position based on here. I open the position when they break below this one. I open the position, break below this one a lot, and also I take a profit and get up from the market, because I know that is big support for us. If you get a plan, you're gonna be winner. But if you don't have a plan, your account is, you blow your account. First, I'm gonna introduce some of the plan that is need to know about the market. But we need to understand another thing too. That is first plan for us to open the long position and short position. Pretty much, if you break this one below this one, we have a really smart money candle, because a lot of people put a fill order around here. If they break this one, potentially you can't like your order is not being filled, And if you've been filled open, your position is being around this area, and this area is not useful for us because your risk to reward ratio is not going to be filled. The next strategy that I'm going to tell you, first, we're going to go in for the first strategy. Second strategy, we gonna be open the position on the short on here. Sorry. First, open the position, waiting for the market to get a react on this area. Get a react on this area, because this area we have a really important area. This area is really important because we have a Fibonacci, we have a really big area of the support. Fibonacci is 618, and we have a one horizontal resistance too. That is make us to be assume this area is a lot of people open the long position around this area. First, I'm gonna going for the more details based on the trend line. Trend line, if you care about the trend line, that is trend line for us. You know the problem of the trend line. Around all of your trend line is been okay, because trend line is not horizontal line to be accurate, and you need to first, we're gonna going for these tools on the here parallel channel. You need to identify the trend line by this one. Don't drag it. If you are not a professional trader, don't drag it, because you need to identify, because the parallel channel tell you the area of the shadow as well. Because if you just thinking that is the trend line is based on this one, you still you have a lot of stop loss, because you drag the one line, and this line is not sometimes accurate, because market is not magic to exactly react on that line. You need to understand the one drag the one channel. This area, another confirmation for us for the open the position and the short as well. As you can see here, we have a one area of the support on this area, one area of the support, one area as a trend line is going to be break up below this one, and the one area we have a 382 Fibo level as well. If they break below this one, we potentially lost this area of the support around the 22,000. The second one that I'm gonna tell you about the line, you need to have a plan. If you're going for the weekly time frame and identify the trend line, as you can see here, we not ignore this one, because that is for me is we dragged this one around. We should identify our support, what we're gonna get. That is not for us is useful, because trend line for the weekly time frame for this time is gonna be help us out in the future position. If the market is bounced up, we should care about this line as well. But we're gonna go in for the forward and just tell you, as you know, like a trend line shouldn't be more than between 30 degrees to 45 degrees. If your trend line is like a 70 degrees, 80 degrees, that is not trend line. You need to care about this. What's the degree that's your trend line? The trend line between the 35 to 45, 30 degrees to the 40 degrees, 45 degrees. Even sometimes not 50 degrees is not good trend line too, because that is market is based on the smart monies has a candle, and that is not really good for the care about that. As you can see here, if you going for the trend line, if you have a going for the like a lower time previews, because we are on the weekly time frame, still we can drag this area for the support and resistance. I just use this area because just use one line because it's more important for us. We're gonna come back to the daily time frame again and see what we got. As you can see here, the like a trend line, big trend line for the weekly is around this area, and this area is for us is really important. If you are scared to open the position, that is right, because based on you have a lot of losses. That is correct. I do this, I have a same as well. When I have like a 3 or 4 stop loss per week or per day, normally I'm not open that much position. 1 or 2 or 3 is maximum position that I'm open, because I just risk it like more than 3% of my account balance per day. And this area for us is really important. Come back to the chart again. This area, big trend line, is really important for us too. We're gonna go in for the another area for find it out to open the position. This is a really good area to open the position. If you see this one, if the market is bouncing down and get a support from this area, is really important, good area for the open the position. Gotta go in for the long position. We have a really short low stop loss, because our stop loss is gonna be around this area, and we're gonna get a 5.66 risk to reward ratio. It really care when you open the position, because a strategy for the trade is really important. Doesn't really matter what, if you base on the trend line, you open the position based on the trend line, that's fine. If you open the position based on the moving averages, it's completely fine. If you open the position based on the just horizontal line, that is fine. But don't get a FOMO to open every position. Every time is not good time for the position. Imagine that I open the position on here. A lot of people open the position on here. We have a big support here. Just a little bit zoom in. We have a big support here. We need to wait for the trade. If you're not waiting for the trade, you have a lot of stop loss. You need to set an alarm. Don't looking for the market. For sure, you need to, if you are working as a full-time trader, you need to find the area that is need to know about the market, and need to know about them how to open the position. For me, that is a stupid thing that is open the position on here, because we have a big candle here, and you know that is really important. Trend line, horizontal support, and the Fibo level 2. That is really important to understand the sentiment of the market. If you are based on the FOMO open the position, you're gonna be broke. If you open the position based on the emotional, you're gonna be broke. I have a 5 risk management strategy. I'll leave a link in the description. I highly recommend you to watch those one, because this is those one that is my mistake at the beginning. Still I have a mistake. I don't have a still I get a FOMO. Still I get a getting excited about the candle. Still I'm getting like a based on the other people and the some of the people that is write it on something on Twitter or something. I'm close my position for sure, because sometimes I can't see anything, but that is wrong. If you are doing this one, you're gonna be below your account balance. Make your strategy for yourself. If you don't have any strategy, you're gonna lose a lot of trade. All of the time, market doesn't have a trade. Market doesn't have a trade every single minute. Over 70% of the market is ranging. You need to wait. You need to set up your alarm, trading, study about the market sentiment to find out the best strategy for yourself. That is for today. For now, on the next video, I'm gonna talking about the volume, how to have a strategy based on the sentiment, read the sentiment of the market. I hope so that the video is helping you. I have a Discord channel. If you like, you can follow my Discord channel, and if you can follow my Discord and follow my YouTube channel as well. And see you next time, guys.